Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on CMG SKX NKE and TWTR daily weekly time frame. So the CMG bulls have continued strong ever since we saw a break of that 420 resistance level. 3 nice follow-through days in a row. We're looking at resistance of 428.52 and then up towards 434.58, the highest price we saw after that earnings reaction. So the bulls have made a full recovery, and this was a significant close on the weekly time frame, not only because it was at the high of the week, but also because that 50-week moving average resistance, which had rejected the price the previous 3 weeks, is now support. And the last time that this 50-week moving average was support, we have to zoom way back, and that's going to be back in October 2015. So pretty much 16 months ago is the last time this level was support. Look at the channels tightening on the Bollinger Bands. They're now beginning to expand to the upside. We're leveling out. If we break 434.58, that is signal number 1 that the long-term weekly trend is favoring the bulls. If we get above 444.13, that's all the convincing I need, and we're going to be looking for CMG bulls to start an uptrend here. So we are seeing the change of a trend underway. Just a couple more levels for the bulls to break, and they do have momentum as we're heading up towards those levels. SKX, after 4 big red days, we are still filling the gap, but the bulls are bouncing off the 200-day moving average of 25.57. We closed up at the high of the day, showing that strength on some pretty decent volume Friday, and the bears are going to be looking for a lower high on this bounce, and then a break of the 200-day moving average to continue covering or continue filling this gap. The bulls obviously want to see higher lows and higher highs, keeping the 200-day moving average as support and trying to head back to the recent high of 28.50. So the 200-day moving average has now established itself as a key support, holding Thursday and Friday, and it's all going to be up to how much upside the bulls can see. If we see increasing bull volume on this bounce attempt, we'll know there's some strength behind it. If we see decreasing bull volume, we will know to be looking for a bearish entry to head back down to test that 200-day moving average again. The weekly time frame also trying to hold on to support, but we could not keep that 50-week moving average of 26.44. We closed below that level and lost it as support. So it rejected the last bounce attempt. We got over it this time, but could not hold the back test. And we're going to be watching this key 200-week moving average support after the low of last week bounced off that level. NKE still strong. Nice solid bull volume. So we consolidated a little bit. The gap up was for selling on Thursday. The gap down was for buying on Friday. Close up at the high of the day. Still very strong for the NKE bulls, and we now have a new support level to be watching of 55.86, the low of that consolidation. So if we see continuation and a break of the high of 56.92, we will know the bulls are in control. But if we can't break 56.92 and then we pull back and break 55.86, we're going to see some more significant consolidation. But the weekly time frame certainly is favoring these bulls, backtesting and holding the upper Bollinger Band in the 100-week moving average. And we're going to be looking, again, scouting a top fishing bearish entry play as we approach $60 psychological resistance. If we break $60, same thing as CMG, we're going to be looking at a longer-term trend change. Let's zoom out and look at that trend change. But if we can't break $60, it's just going to be another lower high in the long-term pullback. So here we go, the 2015, end of 2015 high, lower highs and lower lows very clearly since then, and the bulls are trying to break the lower high pattern by getting over 59.95. TWTR, I'm putting GoPro and Twitter in the same category here. Both of them hovering above their all-time lows, both of them seeing an oversold bounce, and both of them seeing healthy consolidation after that oversold bounce. So we had a couple-day bounce. We now have multiple inside candlesticks where the range of Thursday fit within Wednesday, the range of Friday within Thursday, and we're going to see a clear break of this tightening range, which is accompanied by declining volume, this pattern of reaching an equilibrium, And because we close at the high of the day on Friday, it is more likely that we see a bullish break than a bearish break, and we're looking up at 16.89, the highest price we've seen in this move. Now, why I'm keeping an eye on GoPro and Twitter is because the bulls are obviously struggling. Look at the long-term trend here. They're struggling with the market in the most favorable conditions for the bulls that we have seen in recent memory. So if we do see the markets begin to consolidate, that leads me to believe that we're going to see Twitter and GoPro pull back down towards their all-time low. And if we see a break of that all-time low, there's going to be some really nice gains for the bears. So the markets are still extremely strong. There's no sign of slowdown at this point. I'm just looking at the overall trend, seeing that these names are in some long-term bear trends, and if the market begins to consolidate, I'm going to be looking for them to see some weakness as well. So it is a bullish reversal candlestick on Twitter. We're watching the middle Bollinger Band resistance, which is 1761 and dropping, and we'll see if the bulls are able to get over that level. But a very clear lower high pattern. We can draw trend lines all over the majority of these charts showing these weaknesses. And that would be where I put this downtrend. We did close above it one candlestick, so actually I would probably put it right there so the candlestick could not close above it, where we have a rejection and then another rejection, and here we are going to test that again this coming week. So I appreciate you watching. We'll keep checking in on these names. Have a great weekend.